Hi, and welcome to the Getting the Most Out of Market Club webinar. My name is Susan Jackson, and I'm part of the customer support team here at Market Club. Today's presenter will be Adam Hewison, president of INO.com and co-creator of Market Club. Today, Adam will be covering trading styles and also real-world examples of those trading styles. So, Adam, let's get started.
Thanks, Susan. Hi, Adam Hewison here for Market Club, and we're very excited today to be talking about what kind of trader are you? Are you a short-term trader, intermediate-term trader, or a long-term trader? We'll be looking at three specific examples that you can follow and track with us. The first one is going to be gold. Very much in the news, big market. You can watch that with us and see how we traded. And then we're going to look at Apple. Huge market. I'm a huge fan of Apple Computer. I think you'll really love that video. And the last one we track is a very popular ETF that tracks the euro, that's the currency, using our strategy. So let's get started. The first market is going to be gold. Let's not waste any more time and get right into this. And that's the symbol on Market Club. And you can see it's right up here. It's down $18.77. So it's a good time to show you exactly how the trade triangles do work. We're looking at a daily chart right here. And this is a candlestick chart. Now, candlestick charts became very popular several hundred years ago in Japan. They used them for rice trading. What I like about candlestick charts, it gives you a lot of information about the market. Now, here's a good example. You see this long tail right here? The market popped down here and rallied back up and closed. Even though it closed low, it still closed very close to its highs of the day. That was very important information. Now, I want to put in our trade triangles. Now, trading short term, what we recommend with Market Club for gold is this. You're going to use the weekly triangle. And that's going to be for your trend, okay? So that's for trend, and it's right here. This is the one I'm going to be using. Then you use your daily triangle for timing, okay? So we'll be taking this triangle too. So I'm going to take everything off the screen and put it on a trade triangle so you can see these dynamically come in. Now, people often ask us, they say, well, do we put these trade triangles in after the fact? Well, the reality is no. These are put in during the day, and I'm going to put the weekly one in first. And there you see it right down here, and you see it right here and here. So daily comes in next, and this is a lot more activity in the daily. Before I put that in, let me just show you very quickly what we mean by about using the weekly triangles for trending gold. So here's the weekly trade triangle. The next trade triangle we have is actually quite some time. This is in December, and you can see basically it was at $1,117.90. That changed the trend according to our program. So you've got to buy here. So all you want to do during this period, okay, from October, I believe it was October 6th, all the way through till this date here, is to be buying gold based on our trade triangles, on the daily trade triangle. Now, if we take this off the screen again, I want to be doing this quite a bit, so we'll be taking questions after we go through this, but I will show you some of the things that we're looking at. We've got our weekly triangles right here and right here. We're going to put our daily triangles in here. This is going to give a lot more dynamic play to this market. Now, remember what I said before. We talked about this is the trend, major trend right here. So buy here, we're out right here. We get back in, we're out. So the red doesn't mean you go short. It just means you get out of the position. Now the market comes down, we get in right here. And this is when you catch a nice swing. This is what I call a nice swing, a really nice play that produced a profit of close to $113.96 an ounce. We get back in here because remember we were trading with the green triangle, green weekly trend triangle. We get out here, and this produces a loss of $10.89. So not every, even though we're filtering the trades, there were basically 4 trades here, 2 of which were profitable and 2 of which were not profitable. But look what happened. We get out at $1,175. That's $50 from the top. Now, people may have said, well, it's just a setback, whatever. No one knows how far the market's going to go. Look at today. We're doing this live. That's why the screen just went white again. We refreshed the screen. We're trading down at $1,114. That's 60 some dollars lower than our signal. On top of that, we had a signal right here at $1,117.90 as a signal to go short gold. Now, I know that sounds probably sacrilegious to a lot of people out there, but if you're going to follow a system, a short-term system like we're talking about for gold, you have to follow the rules. It's the only way to be successful in the long term. Now, the program we talked about going from the early October, you can go back. If you're a Market Club member, you have access to all these signals, every one of them. You can go back, you can do the math, see how it works, but it gives you a tremendous amount of confidence. It gives you a game plan. It gives you a direction of how the markets are going to go in the future. Now, here we are. We're closing way down. Now, we have to go all the way back somewhere to here to the early part of November, let's say mid-November, a little early part of November, to have a close like this in gold. This is not necessarily a good thing. I would think if we're closing down here, I would imagine that early next week, Monday and Tuesday, we're going to see some more pressure coming down, maybe down to this level here, 1,100. But the reality is the air is being taken out of this market. I had a post today that I think you may enjoy. It was called "It Doesn't Matter What You Think." And the reality is it doesn't matter what I think or what you think. It's what the market thinks. And that's what you have to do. And that's what the trade triangles do. They interpret the language of the market. And clearly when we had a signal here to exit positions, I mean, that may not have been the most popular signal anyone's ever seen on gold, but the reality is it saved us 60-some dollars an ounce, or $6,000 a contract if you're trading gold in the futures markets. So again, this is using a short-term trading technique. So once again, it's weekly. And that's this one right here for trend. So you only trade in the direction of the trend, and then it's daily triangles for timing to get in and out of the market. You're only going to be trading in the direction. In this case, you're only going to take this signal, this signal, this signal. Okay? Now that we have a red-green weekly, a red triangle, weekly triangle, you only want to take the red signals as going short. Does that make sense? I tell you what, Susan, let's open the floor up to questions because we've gone through this example, and maybe I've done my best to explain it, but maybe some of our members and some of our users have some questions.
Mark has a question.
Yes,
Go ahead, Mark.
Can you hear me?
Yes.
Yes, my question is, can you use your trading triangle technology safely with options, following the trend and the timing devices that you use? And would it be most conservative to just buy at-the-money puts or calls and follow your trade triangles?
Basically, I don't trade options, but I know a lot of people do trade options based on our trade triangle technology. And what they like about it is the underlying asset. Of course, you trade options on the underlying asset. In this case, it would be gold or it could be a stock. And they use the trade triangles for the momentum. And I know a lot of our members who do trade options have been very successful using this approach. So I would say while it's not totally option-centric, it certainly can be used successfully to trade options. I hope that answers your question.
Thank you.
Okay, we're going to go ahead and move on now to our intermediate term example.